Hello, everyone. Welcome back to DeFIRE AMA. Today is the 28th, and we have a presentation on the Blaze protocol and some updates on our landing page rebranding design and on some upcoming opportunities to get airdrops of our Flare token coming up early next week. So let's get into it. First off, I've put together a little presentation kind of explaining the Blaze ecosystem, and I wanted to focus in on some of the container strategy ideas that we're developing that will allow um, investors to be exposed to assets that are anywhere from moderately to very volatile in the market uh, without suffering the downside of having a unexpected loss, as often happens um, when you're asleep on the other side of the world or some drama event happens and you don't catch it in time and experience a significant short-term loss that then has to be regained over time. um, this will be something that I think will be a benefit just to everyone, really, even who are professionals investors. Of course, there are tools that allow you to plan for stop loss measures and whatnot, but they haven't been created in a systemic way that allows you um, to put investments across the board across DeFi. It tends to be on the major coins. It's easier to do with centralized exchanges. There are some DeFi protocols that are starting to implement those kinds of tools, but um, in the configuration that we are providing, where you're exposed to multiple assets and can then protect against volatility, that's going to be a completely novel um, architecture. And so I'll just kind of go through and give a broad overview of not a real example that we're considering, but just something that I put up and diagrammed out so that everyone can kind of understand their architecture. So let's see. I guess as a point of business, before we get into that, so we are very close to releasing the landing page. It's a matter of days now, and so that will be announced shortly. We're just trying to confirm real quick on the exact timing with the developers. And then also that will shortly thereafter that will allow us to give a time frame on the next round of sales for our community sale, which shouldn't be that much longer after we've uh, launched the new landing design. That's a placeholder anyway. This is going to be kind of a 2D design, and then we're still working with the design firm Owls to implement some 3D features. So that will be rolled out at another stage. So something to continue to prevent to provide interest coming into the ecosystem. Big announcement that will be announced publicly, and this is a little bit of alpha. We will be doing a AMA with Cryptonaires in their Discord on Friday at 10 p.m. UTC. So it would be awesome to have a good showing there from our community. If you can make it, please, if you're not already joined into the Cryptonaires Discord channel, go ahead and get the link and get signed up there so that we can give give their followers a good sense of the good organic growth of our community and the support that we have. And hopefully that will allow um, those folks to invest in the next round shortly thereafter. We're trying to time it out so that they'll be hearing about the opportunity and then be able to turn around and invest in DeFi. So that's going to be huge. They have a really huge reach. They have a great community, and we're hoping that some of their community will adopt DeFi as well. Um, and then the last update is that there is going to be a contest coming up on Twitter, and so you'll want to check Twitter on Monday. This is going to be a contest for the DeFIRE Academy, and what we're asking for is contributions in the way of educational materials. Um, we have a document started that is going to be kind of an archive of all of the best articles and videos and other educational data that's out there, both on Web 2 platforms and in Web 3 protocol, academies and whatnot that's floating around there. We want to try and create a central database and then create a search engine around that so that our own community uh, can search for all of those materials in a centralized way. And then hopefully at some point it can become a resource for other people that hear about it just through word of mouth uh, in in both the crypto Twitterverse and just around other protocols. Um, what's gonna what's gonna happen there is that you'll be able to post a link to a good article, video, or some other educational resource. You can cross-reference if it's already been added to our Excel document by clicking into the link that will be provided. And if it's not there, then you can reply with the link. And it's good for one opportunity for a Flare token per week. So this will go on a weekly basis on Mondays. Um, and the first person who posts the link will have the credit for the contribution. If in fact there's more than one person who replies with the same link to the same article or video or whatnot. But otherwise, as many people as can participate as possible, as long as there's something new that they're bringing and adding to the Twitter thread, and then I will go through and check to see that all of them are original contributions, and then we'll airdrop a Flare token to all of the folks who participate. Most likely by providing them with a code for which they'll be able to redeem the Flare token. So that'll be great because it's been a while since people have had an opportunity to earn Flare. There are people that did not get in on the initial push of Flare accumulation, and the earlier you are to accumulate those, the more that you'll be able to benefit from that down the road. Even if you are a holder of DeFi, there will still be utility for the Flare token. So it will be of mutual benefit to the protocol and to future investors, and you can have increased voting power in the meantime by holding more Flare tokens. So I hope that everyone will take a chance to participate in that, because it would be great if we could just accumulate all of that information just with one or two contributors. But at this point, I think the fastest way to build that up will be to involve the community. There's always just better results when you crowdsource things anyway. That's the whole idea behind using the DAO model. And so hopefully it will be a big success. And we'll get started next week, and hopefully it'll just keep building. So to get into the presentation that I put together, it's somewhat of a recap of last week, but with some new data. So I'll go through the initial slides rather quickly, and then when we get to the new information, I'll focus on that. So first of all, this is a slide showing the diagram of the DeFIRE ecosystem. On the left, you can see the two protocols that will be our initial flagship protocols for the ecosystem, Blaze which we will be focusing on today, and then Ignite. Blaze is a marketplace of containers that utilize different strategies to accumulate yield for different assets and different protocols across DeFi. And then Ignite is a lending protocol, lending and borrowing, where you can use your Blaze tokens as collateral, and the loan is self-repaying based on the future yield of your Blaze shares. So it provides an opportunity to have a lower risk of borrowing while freeing up the liquidity that you have invested in Blaze without having to let go of your upside return on investments there. So that should be a powerful combination. We're looking at having our Blaze MVP ready relatively soon. Everyone has already, who was in the Discord, has had a chance to get some updates about that. The full capability of Blaze, including customized containers and the gamification aspect of it, will be available later in quarter 3, and then we're still shooting for Ignite to have its MVP launched in quarter 4 of 2022. And then to the right of those icons is our DeFIRE Academy. The DeFIRE Academy is initially going to be focused on our protocol-specific information. Work has begun on writing scripts for the Blaze protocol now that we have a very solid understanding of what kinds of strategies we'll be starting out with. And there's been some work to diagram those out, and we have figured out terminologies to explain to people how all of it interacts. So that can now be put out into a document. And then one thing that I would ask for your feedback on, if you want to come back and drop a comment in the server later, would be, do you prefer watching whiteboard crypto animations, or do you prefer watching video cast animations? Keeping in mind that these are going to be objective videos that aren't really going into opinions on better and worse strategies or aspects of the crypto market. They're just meant to be informational. So, whether or not there's a person speaking, the person's not going to be going off script and expressing some sort of an opinion about the benefits, or it'll be explaining the protocol as factually as possible, and as mostly in terms of just making sure that people know how to interact with it. So in that sense, whiteboard versus video casting, having a real person versus an animation, isn't really going to make a difference. But I do think people have a different response to different styles. So it would be interesting to know if people have a preference there. When you go and look for educational material, what percentage of it do you prefer to be in the whiteboard style, and how often do you find yourself preferring just to see an actual person relaying information? And then the last icon in this ecosystem diagram is the DeFIRE DAO. And DeFIRE DAO is already launched. That is where the interaction around our DeFIRE token and our GDFIRE governance token will be centered. All of the revenue that is shared to our investors will be funneled through the GDFIRE token to their shares. And so anyone who's a GDFIRE holder is also part of GDFIRE DAO and has the rights to vote on any aspect of the overall ecosystem, and also has the opportunity to contribute to the ecosystem through one of our working teams if they'd like to. They have the opportunity to shape the future trajectory of the protocol. So, unlike other governance tokens that provide benefits but don't necessarily incentivize uh, sustained revenue growth over time, they're just providing um, yield in the way of rewards emissions that over time are going to decrease. With DeFIRE, the revenue share increase over time because of the fact that we'll be putting out new protocols. We don't have any intention of just stopping at Blazing Night. We continue to plan on building out more infrastructure to provide further full-scale services for an investment portfolio that follows the FIRE movement principles of financial independence and retiring early. So that's the overview of the ecosystem. And then to briefly explain how Blaze works, there is the diagram of how Blaze Ignite and DeFi DAO interact from on the user level with the tokens and the streams of inputs and outputs of capital. So on the bottom left, you see that the investor would start by depositing into Blaze, and then they would purchase shares of a container, which would come out as a Blaze receipt token, which is, as I say, it's more of a share of the percentage of the container that you own, and not necessarily tokens that can be swapped out on the secondary market. They're something that you hold in your wallet and then redeem when you're ready to withdraw your deposit plus whatever interest you've accrued over that time. And above the Blaze icon, you can see that some of the fees and whatnot are that you can reinvest that in DeFi. Some of the rewards you can put back into DeFi, and then you can lock them and gain the GDFire token. And then you can see that GDFire accrues rewards from fees and revenue accumulated from Blaze. So um, if you hold GDFire, then you have the opportunity to boost your containers the containers that you choose within the Blaze protocol. And so if you also are invested within the Blaze protocol, then those containers would receive a higher APR. So you would be boosting your APR in the container, and then the container would then provide more rewards that would be funneled back into your GD Fire rewards. So it's a positive spinning flywheel effect there. And then Blaze also interacts with Ignite. If rather than withdrawing, if you take your Blaze shares and then deposit them as collateral into Ignite, so you can see the red Blaze icon then has an arrow to the right leading up into the Ignite protocol. You collateralize your Blaze token, and then Ignite uses the yield that accrues after you've deposited that collateral to start paying down whatever loan you take out. So the loan will be paid out in the lit token, which is the name that we've chosen for the stablecoin that we will use to provide liquidity. And the lit token will be, you'll be able to swap it out for other stablecoins or other assets. And then you can either reinvest the into Blaze, or you can reinvest into some other asset available in DeFi, or you could take profit. So that at that point, there's lots of different options for how you could use that capital while also having a passively self-repaying loan with your Blaze shares. And then once the loan is repaid, you can then take your Blaze shares, exit Ignite, and then redeem from Blaze if you'd like to go ahead and take profit, or you can continue to accrue more interest after you pay off your loan, and that interest will then be available to withdraw. So that's an overview of how the first the flagship protocol and the Unite protocol will interact with the DeFIRE DAO and how the tokens will interact. And then moving on, last week I also kind of gave a mock-up of what the UI, what the user interface might look like in the Blaze protocol when we're looking at a particular container. You can see here that we have what would be like a very low risk stablecoin container. The stablecoin container, could either be just USDC or DAI or a liquidity pairing of the two. Below the icon token icons, you have the APR for the container, and then in the left-hand corner there is a icon indicating that this token or that this container has been boosted by DeFIRE holders, and so that is the boost multiplier that is currently providing additional APR to whoever is invested in the container. And then to the right, you can see all of the details of the constituent parts that are being used to create the yield that's being returned to your investment, broken down by the asset and the chain and the protocol and the total value locked in that particular pool or vault. And then, it could be just one protocol that is being staked in, or a combination of different protocols. And so that's why there's multiple things listed there. And then you go down and it talks about risk events that may happen, the risk level that has been assessed for the container, actions that would be taken in order to react to the events that may happen, um, and the policies that would, the range of actions. The policies would be the range of actions that the container manager could take to adjust to market conditions. And then finally, the fees for the container. So how they all break down into transaction fees, if there's a management fee, if what percentage of the fees will go to the DeFIRE holders, and what percentage might go to DeFIRE DAO's treasury. Um, so those are all constituent parts, and there will probably be more than that as well. A general view of the core elements that will be used to provide information to the investor about risk and potential upside, and how it all breaks down, how it all is coming in and out of the container, and allows people to then take that information and assess what percentage of their portfolio they might want to invest in this particular strategy. So moving on to kind of the newer content for this week. We have an actual mock-up of a strategy. And this particular strategy is an innovation that I think is going to be very popular because it allows exposure to the upside of a token that would have the standard volatility that we see in crypto whenever the market has a large jump or a correction. Um, if you stay exposed to that token, then you either need to be uh, having a high conviction for a long-term hold, or you need to be aware of day-to-day changes in the conditions for that particular asset, and be ready to either withdraw or to dollar cost average in more. Um, that is something that there is no solution to in DeFi yet in terms of um, for the average investor who needs to go to sleep and uh, would like to be exposed to a more complex strategy, but doesn't want to wake up to find out that they've taken a big loss on their position. You can see there's a little arrow pointing to a diamond that has a bar going through the. There's a long green arrow, and it's going into the Blaze container liquidity box there, and it says that it's a stop loss um, function. So the details of exactly how much of a shift in the market on a particular asset would need to be is probably specific to different containers, but for the purposes of discussion, this one is like a 10% loss in value would trigger an exit from a position on the what's shown as the green market high yield strategy part of the divergence of this container. So you can see in that green market high yield strategy aspect there is um, a liquidity pair based off of Matic, and then the other asset is just a fictional asset that's been used for demonstration. But you can see that the rewards are paid out in DQuick from the QuickSwap uh, ecosystem, and so that container or that aspect of the container is auto compounding DQuick rewards back into that liquidity pair. And so you can see on the right, there's the base APR. So if you just invested in a farming pool on QuickSwap, that would be your base APR of of 85%. But with this auto compounding within a week, your APR would be in the 130%. So you're already getting more upside than you'd be able to get in anywhere except for an auto compounder. Well, if you're in an auto compounder protocol, you still have to look. You still have to time your exit, and you can still lose more on a market drop with a high APR than you gained in interest over the time of that drop. And so having the stop loss allows the money to be withdrawn from that particular that strategy and redirected into a what's been listed on the top part of the container as the red market or low impermanent loss strategy. So at that point, the money has been withdrawn from the QuickSwap strategy and has been distributed into a stablecoin strategy that still has a relatively high yield for stablecoins. And so, in this scenario, the container manager would have the first option in a very short time frame to determine if this was a larger market shift, if this is something that can be shifted back into the QuickSwap strategy, and then if it is determined that it's a larger change in market conditions, then the community would be brought in to make a vote on whether to when and how to redirect those funds back into the higher yield strategy. So there would be no need to withdraw from the container. There would be continuous yield being generated. It would just be a matter of you would have minimal uh, minimal losses from that market drop. And so, this might not be a one-stop solution for the person who has the time to take a portion of their portfolio and be watching the market for most of the day and be willing to take a risk of in a more upward market might be willing to take the risk that they can go to sleep and wake up in the morning and more from just waiting out. that strategy and not and taking the risk that there could be a drop while they go to sleep, um, versus somebody else who says, I don't want to think about this particular part of my portfolio from day to day. I just want to know that over time it's going to continue to produce a nice return. And so this strategy allows you to be exposed to the asset, if that's either quick swap or whatever the other part of the liquidity pair is, or that, whatever protocol it is, the protocol's primary, if you consider it a high value or blue chip token, you're exposed to that asset on the long term or a medium term, and you can still gain a very high yield because a lot of these combinations of strategies will be providing higher yield than you could gain yourself by just investing in a farming pool. Uh, and so there are other potential strategies that we've come up with where it would not just be auto compounding an LP. It would be taking the rewards from that LP and then putting them into another very high APR strategy that's downstream. Excuse me. And the downstream strategy might, it would be less of the overall value of the investment. It might, the rewards might be, 5% or less of the overall amount of your investment that's in the pool, but then that's getting pushed into a very high APR strategy, and so you're getting all the upside of being exposed to that additional liquidity pair, with none of the downside of losing any of your base investment. So there's just a lot of opportunity there, and we're just scratching the surface of how we can provide people with access to different aspects of the DeFi ecosystem without having the what has traditionally been a very high risk proposition. Even with the best protocols, there hasn't been great solutions to how to hold on long term to assets that we know will gain value over time without the short term dramatic losses that sometimes happen. Um, so this is just one style of strategy. Not all of them would have that stop loss on them. Some of them might just be combinations of tokens. Some of them might be tokens that themselves are indexes of other blockchains or other primary crypto, index coins like the top 20 coins or, the top altcoins. There are other protocols that are started creating index tokens. And then there's also just the big tokens, Bitcoin and Ethereum. And there's a lot of different ways to direct your liquidity to gain yield, especially through kinds of strategies that we'll be able to build. And the on the more technical side of the benefits of using Blaze would be that the architecture of the actual coding and engineering is such that there's going to be a very quick turnaround time to um, to adjust the strategy containers themselves. So, for instance, if there's a certain stablecoin um, liquidity pair that has been used for the red market side of the strategy, and there's a new that gains a higher opportunity for a higher yield, then that could be plugged into the existing container architecture without having to just completely redeploy the entire contract and or the entire set of contracts and have to have everybody withdraw their funds from this particular strategy in order to then redeploy a new strategy. That does happen in other kinds of earlier generation protocols that have that balancer style of technology, and balancer being a protocol in Ethereum that there are several forks that are very popular and have done very well. And not just balancer, but other technologies that we kind of are playing off of with our base technology for Blaze. So it's going to be a highly adaptable, stackable kind of um, protocol, and which will allow us to have fast reaction times on certain things. that I think will give us a competitive advantage and will allow people to benefit. So again, that's another reason why we think that holding GD Fire and accumulating the rewards from a protocol like Blaze is going to be um, a very good long-term play. So getting in at this point is just going to be a huge benefit. Whoever can plan to add that into their overall portfolio. Uh, and then so that's the strategy that I wanted to talk about. And then there's a couple of other containers from previous weeks that I had on this slide deck, but I didn't really want to speak about those per se so much as to go back perhaps to just speak about the risk uh, assessment aspect of Blaze. So here is a copy of the of a beefy protocol vault description, and this is their criterion for assessing risk. And we like this. We think that there's a lot of good information here. It's very easy to read. So we have things that we want to provide as data points beyond what's listed here, but we do think that this kind of very clean and easy to understand, very well laid out um, infrastructure is what we'd like to provide for Blaze with our own style and branding. Um, if you see anything here that you think would be good um, to augment or to add to, please let us know. We're still working out the details on user interface, so use your input, um, and that is the conclusion of new information that I had for this week. I hope you all are having a great week. Um, don't forget Cryptonaire's AMA happening at 10 p.m. UTC on Friday, and the Cryptonaire's Discord. We'd love to see you there. It'd be great to show support to the folks that may be our future investors and fellow community members here. I will be in the Discord lounge for a few more minutes, but I'm going to go ahead and sign out. Um, don't forget to check in to Twitter to see our next update. Um, SupremeBit has done a great job this week of creating uh, a great little newsletter that we put in announcements. It was wonderful for everybody to react to that. We got some good feedback on Twitter. So keep checking Twitter for updates. We're going to have a lot of things coming out in the next week or so. And with that, have a great week. I'll check with you next time.